The purpose of my presentation is to present some context around Vietnam within the region. All of the presentation so far has been on Vietnam performance indicators. My presentation will just put some context within the region and how we're performing. And the first slide is on GDP. Normally I put up a table of GDP. It gets a little bit confusing. This is the 2013 forecast from the IMF. What it's showing is grades between 4 and 6% is light blue, 6% and over is dark blue. It's showing that Vietnam is in that lower bracket within the region. This is one of the lowest growth rates that Vietnam has had over the past decade and a half. And we are now balancing that off against inflation. So it's fundamental economics. It's very difficult to get both of those right. But the issue is that we are behind some of our neighbours in GDP growth for 2013. Let's look forward and the rest of the IMF predictions. What this table is showing is our regional counterparts and what's happening across the region. What's happening across the region. So if we have a look country by country, we're seeing very often growth, and the growth for 2013 that the IMF is predicting is coming from increased domestic demand, external demand within the region, public fiscal measures in the case of Thailand rebuilding, and Malaysia on their pro-growth policy. So what we're seeing is across the region is some very, very good growth potential. As we move through cross-border capital flows, since 2007 there has generally been a net inflow into Asia from other parts of the world investing in property. What we're seeing this year and what's being forecast as we move forward on the numbers here is that there will be a net outflow from Asia. So what's happening is the wealth centre, if you like, has moved from the west to the east. And so there will now be a net outflow as Asia starts to invest elsewhere. In fact, Savills announced last night that there was a £231 million deal in London by a major Chinese insurance company. So these are real deals that are happening. This next slide is showing where the purchases are. We quite often think that in Asia, most of the purchases are being Chinese. What this slide does is show where the purchases are. And they're pretty evenly spread through Malaysia, Singapore, China, all of these other areas. So it is not just China, it is a fairly easy spread across the region of investment. This next slide is showing recent retail purchases. Retail is still a very, very strong asset class, very much the darling of most asset classes. It's showing that most of the purchases are in Japan and Australia. The reason why Japan and Australia are popular asset classes for retail purchase, they are very deep and liquid markets. They have a good cap rate spread, debt to yield, so they're still reasonable buying. And they've got good governance and good transparency, so they're attractive markets to invest in. The last one I put there on the bottom, of course, is Eden from Vingroup, and that's just making up the table there and showing them we're in the race. Talking about Vingroup, I put them up last quarter as the 500 million purchase of Eden. This quarter, what was announced is the Warburg Pincus deal. This is a private equity deal, pretty much Hong Kong money into Vietnam. It's a 200 million deal. Warburg Pincus are getting exposure to the retail market and the Vietnam market as a whole. One of the reasons that Warburgs thought this was a good play was that Vingroup had very good governance measures. In a relative context, their governance was good. And as we see from the next slide, this is the Asian corporate governance scorecard. It's the Asian corporate governance scorecard. What this is showing, this is out of all the Asian nations, and unfortunately, There you go. Unfortunately, what we're seeing is that Vietnam has very, very low governance against its neighbours. And so if you're not taking care of your stakeholders, if you're not producing good trading performance and accounts, you're not doing these fundamental things, then your investment will go elsewhere. Where does it go? At the moment, foreign direct investment is going to Philippines, Indonesia, elsewhere. So corporate governance needs to improve, and I think that's across the board. Okay, next slide is on Myanmar. I'm not touching that. Next slide is on Myanmar. Savills Vietnam recently attended REIW in Singapore. This is 500 fund managers all together at the one place. We attended to engage with those fund managers. The intention is we want to lure their investment into Vietnam. What we also did at the same time was launch our Indochina and Myanmar platform, Laos, Cambodia and Myanmar, and we are continuing our process of setting an office up in Myanmar. Why are we doing that? There's already 27 businesses, Vietnam businesses in Myanmar. It makes sense for us to follow. But as a whole, what we're seeing is that this block, if you like, of Indochina and Myanmar is a very attractive emerging market play. You can't get a 25% IRR anywhere throughout the Eastern Asian states, but you can get that through Indochina and Myanmar. A lot of Chinese funds, a lot of the opportunistic funds are looking for those sort of returns, and that's why we're following that money. If I just drill down very, very quickly into some of the things that are making it attractive here. Myanmar, Vietnam have the greatest population. But what we see is that the population growth rate for Laos is very high. I'll just go quickly through these ones. GDP growth is very high in the three countries excluding Laos. It has been very, very high. That will fall. So we're expecting continued acceleration in GDP growth through these three countries over the near term. Sorry about that. FDI, we're seeing very strong Vietnam. Come on. Vietnam, but we're expecting Myanmar to also grow. I apologise for that. And finally, on international visitor arrivals, Cambodia and Vietnam are winning, but again, Myanmar is where we'd see the spikes in the near term. Myanmar, we'll just go through the markets very, very quickly. First of all, if you have a look at the hotels, there's only around 3,000 hotel rooms in Myanmar, in Yangon, very, very fragile amount. This asset class has had enormous growth over the last 12 months. Those hotel room prices have doubled. It's around $170 a room now. They're about 92% occupancy. There's really only 3 5-star hotels. So this is a very, very small asset class that is going to grow quickly. If we then look at offices, offices, very, very shallow amount of stock, very small. It is staying on the offices, very fragile market. What we see is Huang and July are going to complete around 120,000 square metres of retail and office over the next year. That will be delivered in 2014, and that will really affect that office market. Retail, looking at the retail, now, retail volume, very, very small. Retail volume, very, very small. The density is extremely low. Very, very low. So there's a long way to go for the retail development in Yangon. Finally, if we have a look at condos, which is there, condo market is relatively good, well priced. Even though it's still a very young and fragile market, you can see the prices are not too bad. There is a certain amount of familiarity of Yangon residents living in condos. There's still a high occupancy, and condos should continue to do well. They've got a very high absorption rate. We're also doing the same work in Cambodia. We also have the same information for Laos. So all of that, if you need any of that information, it's all available. This second last slide is on the trading block that's under negotiation at the moment. This is the, no, it's not that. is the, that's it, sorry. This, the regional comprehensive economic partnership is under negotiation right now. It's at the beginning stages. It'll take a long time. But what this has the potential to do is to provide an enormous trading bloc. That trading bloc will represent 49% of the world's population and 30% of the world's GDP. If this comes off, this will be a very, very important initiative for the region. As you can see, the numbers are quite large. The last slide is the Payne report. This guy was at REIW in Singapore, Jonathan Payne. He's a behavioural economist. What he does is a little bit more than supply and demand. He has predicted that the growth for the next decade will be 4.2%. This is significantly above the previous decade. What I'd highlight is just his last comments here. And his last comments are distilled from his behavioural economics thinking. And we'll see an era of prosperity, enlightenment and opportunity that very few are predicting over the next decade. If we have a look at that in concert with the previous slide on the trading bloc that we're exposed to and the good growth all the way through the region, then this is quite a firm possibility. And so just to leave on that, that's a little bit of an upside and there is some good potential over the coming decade. So that's the conclusion of my presentation. I apologise for the technical difficulties. Thank you very much for coming this morning. I'd now invite you to, if there's any questions, I can invite Chung and Hang back to the floor and please direct your questions to us. And of course, if there's no questions, we'll be outside for coffee, please, and I look forward to seeing you in the next QMR. Thank you.